Thank you everyone for joining us this afternoon. We have a great presentation that I think is going to help hopefully answer a lot of questions that people have right now surrounding the small business loans that are going out, the CARES Act, maybe touch a little bit on the IRS money that's going out. I know some people have received it, some people have not. So she'll be able to help answer some of those questions. Not a huge deep dive. She's not with the IRS, but at least give you guys a little bit of information on that. So Angie is a CPA and a certified tax coach. She practices in California since 2002. She's one of the 750 certified tax coaches in the country. So a small group there. She runs a boutique tax practice called Finn's Tax CPAs, and she provides exceptionally timely, forward-thinking, and proactive advice to her clients, just like she's doing here for us today. She's helped a lot of her clients save thousands of dollars year after year by helping them with advanced tax reduction strategies, which were normally only available to billionaires with a B and big corporations that aren't really accessible to Main Street business owners. She does focus on real estate, which is great, so she'll be able to help everyone here. And she works with clients, providing them 200 to 300% ROI. She's a professional speaker, hosts a lot of different seminars for various organizations on the benefits of proactive tax planning and not donating to the IRS, which hopefully we aren't all having to do. So with that, I'm going to hand it over to Angie, and we're going to monitor the chat box and see the questions coming in. So please do take advantage of chat if you have any questions. We may answer them as we're going. We may wait till the end. Just depends on how things go. I see some people are already using the Q&A box. So, you know, we'll get to those as we go. We do have an hour and a half, so I think there'll be plenty of time for questions. So Angie, welcome, and thank you so much.
Thank you, Jody. Thanks for having me here, and thank you for the warm introduction there. I am delighted to be here. I'm honored to be here because I feel in the time that we're going through now, it's critical that, you know, we help each other and get through this time, and not just survive, but actually thrive through this time. So this is part of the educational venture that I've taken, and you know, I want to be able to help as many business owners as I can to really get through these times. So thank you for having me. So let's dive right into it. Of course, I got to give my disclaimer. This is not tax or legal advice. This is only for informational purposes. My goal is to make you aware of the changes in the tax law and how you may be able to benefit. Everybody's situation is unique, and you need to work with your tax provider who can proactively analyze this at your individual level. Also keep in mind, laws are changing rapidly, and what may be true today may not be true tomorrow, and may be changed, or the law is written in a certain way. By the time it's implemented, there may be modifications, as we've seen happen over the last couple of weeks. And a lot of changes in the law have been passed and are still in the works. So a lot of stuff going on right now. So this is the agenda for today. We're going to discuss the temporary changes in the tax law due to the Families First Coronavirus Response Act. That's a mouthful. And the Coronavirus Aid, Relief, and Economic Securities Act, CARES Act, you know, we call it the CARES Act. We're going to talk about the SBA lending, which is the Economic Injury Disaster Loan, and the Paycheck Protection Plan. We'll talk about what current updates are and what those details on those loans are, so you are more aware. And then we'll also, I want to talk about some of the options you as business owners have besides the loan. The loan is a part of the whole stimulus package. And I know that's what's really in the media, that's what we're all talking about. And it's rightfully so. It's a very important piece of the whole package, but there are other incentives as well that I want you to be aware of and, you know, possibly take advantage of there. Today would have been the day when we would have been all scrambling to get our returns filed and payments made. But you all know tax filing deadline has been extended, and across the board, it's not only the 1040s or the corporate C-Corp tax returns, but all across the board, the IRS came out with implementation, the REBATE ruling, I think it was yesterday or day before, and even the information returns for foreign filing have been extended, and unprecedented ever before. Even the payment due date has been extended. So yet 2 days ago, as it stood 2 days ago, the first quarter estimates, which were due April 15th, had been extended to July 15th, but there was no word about the second quarter estimates that's due in June. But now even those have been extended to July 15th. Of course, you know, partnerships and S corporation returns were due in March, so this extension is not applicable to them. So what does this mean for you? If you're filing for, if you were going to file for an extension, that means today you don't file your return and you don't file an extension. July 15th is really the new April 15th for 2020, the year 2020. However, I encourage for you not to stall, and you know, make sure, however, whether you prepare it yourself or you have it prepare your tax return for you, go ahead and get the information completed, and then wait and decide whether you want to file right now or you want to wait until July 15th. And we'll talk about that. Keep in mind, penalties and interest are stalled between April 15th and July 15th. But if you had underpayment of taxes prior to April 15th, those are, you know, those would still be applicable. Now I say complete your return and then decide, well, hurry up and file, and then decide whether you're going to file or not. And we'll talk about what I mean in that respect. Oh, before we go there, I want to point this out. If you have already scheduled a payment that was due on April 15th, there is a phone number on your screen that you can call to withdraw the payment. So, you know, IRS has provided with that provision so that, you know, you can kind of take advantage of that cash right now. The 2020 recovery rebate, which is the stimulus check, the much talked about stimulus check, is $1,200 credit. It is a credit on your 2020 tax return, which you will find and file in 2021, but they're giving you an advance on it, similar to what happened in 2008, right? But what they're doing is they're basing it on your 2019 AGI. And if you haven't filed your 2019 tax return, then they're looking at your 2018 tax return. Like I said, the credit is $1,200 per taxpayer. For married, filing, joint, obviously it's $2,400, and there is a credit for each child up to 3 children of $500 up to 17 years of age. And then there's limitations, the AGI phase outs. You know, if you're making $75,000, between $75,000 and $99,000 of your AGI for a single taxpayer, you get the credit. Starts phasing out after 75,000, and same for married, filing, joint between 150,000 to 198,000. Now you may say, you may look at it and you may say, oh, I make too much money. Perhaps you make too much money that and you phase out. It's not applicable to you. But I want you to think over here. Um, this is a credit on your 2020 tax return. So you may not get an advance now, but if you position yourself and plan your taxes, um, you can strategically plan to be in that income range to qualify for that credit. You may have children that perhaps you could, maybe they were students last year and then they were earners in 2019. So that would be a year when that would be a situation when you want to go ahead and file the 2019 tax return so they can take a credit. Or same thing for you, maybe in 2018, your income was higher than the threshold, and 2019 it was lower, then you want to go ahead and file your 2019 tax return so that they can base the advance on your 2019 tax return. On the flip side, if your 2018 income was lower and your 2019 income is higher, you don't want to go ahead and file the 2019 tax return yet, because you want it to be based on your 2018 AGI, right? So there's things to consider in this and plan it strategically. And the great thing about this is an advance on the credit, but if you get based on either your 2018 AGI or 2019 AGI, if you get the credit, and then when you do your 2020 tax returns, perhaps you don't qualify for that amount or you qualify for a less amount, you don't have to pay back. So careful planning is critical over here. I want to kind of be mindful of any questions that pertain to what I'm talking about right now. Otherwise, I'll take the questions towards the end. Next, this is the Families First Act, the credits. This is for the the sick and the family leave payroll credits. I won't go too deep into this unless there are questions, and I can take those in the end. But basically, the government is offering great benefits to businesses to not lay off employees, right? So they're encouraging the employers to keep the employees on payroll, and in return, they're providing these tax credits to the employers for providing the sick and family leave. And we'll talk about briefly what the differences are. And then if you have any specific questions, we can take those in the end. Now you have to keep in mind, the FMLA, as it was the FMLA of 1993, I believe, was applicable to employers with 50 employees or more. And you might think in your head, oh, I don't have 50 employees or more, so this doesn't apply to me. But this act makes no mention of that. It says it applies to employers with less than 500 employees without any mention of whether you have 1 or 2 or 49 employees. However, it's very highly likely that we might see a modification to it. Businesses with fewer than 50 employees, right now as it stands, can file an exemption to be for this not to apply to them. But right now as it stands, you have to file for an exemption, and you can basically argue that paying the leave will make it impossible for you to stay in business. I do suggest you document all of this, document why your business meets the criteria, we have yet to see guidance on it. Perhaps soon we will, but it would be a good idea to check with your HR person for this. So this is briefly what qualifies as a paid sick leave. if an employee is unable to work, which is in the office, of course, it's not doable. Or some offices are, essential services are, or telework even, um, due to federal or state or local quarantine related to coronavirus. If your doctor has advised you to self-quarantine yourself, if you're feeling symptoms of COVID-19, if you're caring for an individual who is, been isolated or has been advised to be self-quarantined, and if you're caring for your child due to the closure of daycare. And they did, and there's another, the sixth one, it says if employees experiencing any other substantially similar condition to be determined. So encompasses a whole lot of things. So that's when the employers are required to. So like I said, I don't know if this is a very applicable topic to a lot of you, but if you have any questions on it, we can take them in the end. But it's basically up to 12 weeks, 2 weeks of sick pay and 10 weeks of family pay. This just goes on those. The main highlights of this is what I want to point out is applies to self-employed taxpayers as well. So if you're a Schedule C sole proprietor, it applies to you as well. Any eligible employee is an employee who has been employed for at least 30 days before the leave is requested. And like I said, documentation requirements, we don't have much guidance on it yet, like with a lot of things, but it's coming. I know this is a big topic. This is a big topic. I'm going to be mindful of the time as well. I think we're doing okay time-wise. Because I want to make sure we leave enough time in the end for questions and answers as well.
We've got a good amount of time.
Awesome, awesome. So the business funding, the SBA funding is really talk of the town right now, right? And rightfully so. It's a huge part of the package. And just this itself, we could spend hours, but I'll try to touch on the highlights. One thing I do want to, and I know I've been on other webinars today, so I don't know if I'm repeating myself, but I just do want to point out that the loans is one part of the whole package. So take a holistic approach to this. And we will talk about some of the other options towards the end as well. I know everybody's focusing on loans, everybody's focusing on unemployment, the stimulus check. Those are the big things that are being talked about, but there's other aspects in the CARES Act that you may benefit from as well. Let's talk about the PPP loans, the Paycheck Protection Program. This is available for the period from February 15th through June 30th. And unlike the EIDL loans, this you have to go through your banker in order to apply for these loans. So maintain a relationship. I'm sure you all have a relationship with some banker. If you do not, there are some smaller banks. Actually, I'm finding that smaller banks are doing, and I'm sure you guys are hearing about this as well. The smaller banks and credit unions are actually doing a far better job at this processing than the big banks are doing. And possibly the reason could be that they're smaller and they're not a huge elephant, right? They don't have to go through the bureaucracy and maneuvering like a huge elephant. So perhaps that's one of the reasons. Or perhaps they have a closer relationship with their clients. I know April 3rd is when businesses were going to go live. There were a few hiccups. but they're back, they're on. Bank of America did an amazing job. Wells Fargo was taking applications. What happened is they took applications. They had $10 billion of loans that they could fund, and then they ran out of that within hours. And so then they had to stall the application process, but they're back on. There are other, I keep getting emails. There are these smaller banks, and I even heard PayPal is into this processing. So if you don't have a banker that you generally deal with, or your bank is kind of slow on this, make it a sip of water. There you can reach out to other smaller banks as well. The good piece of feature over here is there's no personal guarantee required for these loans. No collateral is required, and the Treasury actually instructed, and the SBA instructed the banks to fund within 5 business days. So, within the last, I want to say last few days, I've heard so many clients getting, letters of approval, yet to be funded yet, but there's action. Things have started happening, and according to yesterday's status on the loans, I think I have the loan status somewhere over here. Half of the PPP funding has already been processed. So things are moving pretty rapidly. They are working on another stimulus package, not out yet, so too early to talk about it. But if you qualify, and we'll talk about what the qualifications are, I suggest you get going with this process. So I digressed. So the features of the PP loan is no collateral is required, no prepayment penalties, no guarantee fees, no yearly fees, and really attractive terms. It's they're saying the Treasury said 1% to 4%. You cannot go over 4% interest rate up to 10 years, and I've had some banks that are lending at 1% for 2 years. So pretty decent, pretty decent terms. But and I'll talk about this. What is another attractive feature to it? Now, in order to get these loans, the borrower does need to certify that there is uncertainty of current income conditions, right? And they're gonna use these funds to retain workers. Again, the common denominator in the whole of the stimulus is to make sure the economy keeps rolling and workers are retained. So the funds need to be used to retain workers or make mortgage payments, lease payments, or utility payments. And also you cannot apply for another, actually it says you cannot receive another section, apply or receive another section 7A loan, 7A meaning the paycheck protection. So when you may have noticed, some of you who have filed or have applied for this PPP loan, the application would say, have you applied for another loan? And this has caused some confusion among applicants, thinking, oh, that means I cannot apply for the economic injury disaster loan as well as this. No, the question is, have you applied for any other PPP loan? So you can only apply for one PPP loan, that's what it means. But you can apply for an EIDL as well as the PPP. Now you cannot use the funds for the same purpose, obviously, but you can apply for both the loans. And as I'm going along, I'm kind of incorporating the information that has been asked as questions to me. So I'm just, kind of incorporating that into my presentation. But if you have other questions that you need clarification on, again, keep jotting them on the chat, and we'll get to this, get to them in the end. So who is eligible? Any business concern, even if you're a sole proprietor or you're, you know, independent contractor, you can apply for this. Nonprofit organizations can also apply for it. I mentioned sole props, independent contractors, self-employed. Now, this is a little confusing. You know, it's like, why would they say sole props, independent contractors, and self-employed, right? Because, well, from a tax professional aspect, you know, when we think of that, well, that all goes on Schedule C. So why would they say different, why would they call it different terms? And the reason they came back with guidance is there are some folks who get 1099 income, but they don't consider themselves as self-employed. So they just wanted to clarify that from a tax professional point of view. Yeah, they're all, if they're 1099, they're in business for themselves, whether it's whether they're operating as a sole prop or a employee in the corporation. Any business with less than 500 employees is also eligible to apply for this loan. I mentioned the terms of the loan, very attractive, and you can defer payments of the loan for up to 6 to 12 months, depends on the bank. Different banks are doing differently. The maximum amount of the loan, now this is really important to pay attention to. What I've seen happening is banks, like I said, banks have been scrambling to figure out how to implement this. I've had bankers calling me for, okay, what does this mean? You know, how do I calculate payroll costs? You know, because we go right to the code, so we know exactly what it is. So we've been kind of helping them figure this out. And payroll companies are not calculating the payroll costs correctly either. So be very mindful of it. Make sure you're calculating this correctly, or you're working with an advisor who is who knows what's going on here. We at our firm, we've just spent the last, I want to say 10 days just on decoding this code and figuring out what does it really mean. I mean, sure, this is not tax season, April 15th tax season, but it has been very interesting and very busy tax season for sure. So the maximum amount of the loan is the lesser of the average monthly payroll cost for 1 year prior to when you apply for the loan, times 2.5. So which is, so say you apply on April 1st, then you want to take the 12-month period ending March 31st, take the average payroll divided by 12, multiply it by 2.5, or 10 million. So mostly it's the first part of the equation, right, that people are applying for. And what does payroll cost mean? It's not just the wages, and we'll talk about what you can include in it. And actually, we've created a template that we've been providing to the bankers that our clients are dealing with to help them understand. And if you would like a copy of that, feel free to send an email, and I'll share my contact information in the end, and we'll be happy to send that over to you. So, like I said, sole proprietors can apply for this as well, and you want to keep in mind, well, sole proprietors don't have payroll, right? You as a sole proprietor, Schedule C operator, you don't pay yourself a salary. Because you're not an employee of the business, you're the business, right? So what does it mean by payroll cost? So for that, the calculation takes into account your net Schedule C income, which would be your gross revenues, what you're making in your business, less the expenses that you're deducting, what the bottom line, what you're ending up with, because really that's the money that you're making out of your business, right? So that's what they are taking as payroll costs for self-employed people. Now that is capped at $100,000. So if you made $150,000 on your Schedule C income, you got to limit that to 100,000, meaning you can get a loan of a maximum amount of $25,000, right? Um, so, um, so again, the other point. So this, if you have not been in business last year and you started your business in 2020, then you can take your payroll from January 1st to February 29th, the 2 month, and then average that out for the calculation. Very critical to remember over here, excuse me, is that in order, well, actually, I'll talk about that later as well and tie that into what makes this loan really, really attractive. Let's talk about payroll costs. So payroll costs is not just straight up wages. Payroll costs are wages or salary, add to it commissions, add to it any cash tips, any vacation sick leave, retirement benefits, medical insurance. So all of that gets included for the calculation of payroll costs. And it's not net wages, it's gross wages. ADP was not calculating it correctly and they were taking net. So be mindful of that. Now, what does not get included in payroll costs is compensation for any employee over $100,000. So if somebody is making $120,000, that has to be capped at $100,000. Federal employer taxes need to be backed out, and it cannot include compensation for anyone whose principal place of residence is outside of the US. They're very specific with that. So needless to say, I mean, it's a very important calculation because that's the basis of your maximum loan amount, and you'll see basis of what part of the loan can be forgiven. And we come to loan forgiveness part. This is the real benefit of the Paycheck Protection Plan, because if you use the funds provided under this plan for payroll, mortgage interest, rent, utilities, for 8 weeks after you are funded, this is free money. This can be forgiven. Again, this, I say can be forgiven, meaning you still have to apply for forgiveness. So meaning you want to make sure you keep really good documentation. And like I said, you have to, the other part of this, when I said we'll tie that in, you need to maintain your payroll and the number of employees in order to qualify for the loan forgiveness. So very important. So documentation becomes extremely important here. What I'm telling my clients is when you get funded, put those funds in a separate bank account because that makes it for easier tracking. And, because bank is going to want to see all of that. Obviously the banks are, who knows what's going to happen, right? So make sure you're tracking everything properly. And the forgiveness amount is reduced if you don't use it for those purposes, right? And 75% of the funds have to be used for payroll. So it's not like you get a loan of $100,000 and you decide, okay, I'm going to pay my mortgage and utilities and interest, all of that, and that ends up being $50,000 and only $50,000 towards payroll costs. That's not going to do it. They want you to use those funds, at least 75% of those funds for payroll. Obviously, the theme being retain employees. And like I said, for a lot of you who are sole props, or you don't have employees, most of my realtor clients, they don't have employees. But you have to remember, this still works even if you don't have other employees. If you are a corporation, you're an employee of your corporation. If you are a sole proprietor, there's provisions for you to take advantage of this as well. So going back to this, throat's running dry, talking too much. My daughters would say, "Why you talk too much anyways?" So forgiveness amount is reduced if you cut your employees during the 8-week period. And we talked about that. Cut the salary of some of the employees, or if you receive the $10,000 advance over EIDL, we'll talk about that. Then that kind of offsets your PPP. Very important to know. Very important to keep this in mind when you're getting funded, right? So we're in a state of limbo right now. We don't know if we're out of business, when we are going to resume business, right? So say you get funded now, but you're not able to go back to work, and your employees cannot go back to work. Are you just gonna do what? Because you have an 8-week period to employ these funds for them to be forgiven. So keep this in mind, and like I said, keep communicating with your banker. They know too. So maybe you I would say maybe don't. Well, that's not an option. Because one of the thought processes, oh, maybe delay applying for the loan, but the funds may run out. You don't want to do that. My suggestion is apply for the loan, and once it gets approved, talk to your banker. If you can wait to get funded, right? You can defer it until you have a better idea. We none of us have a crystal ball over here to know when this is going to end, or my thing is I don't know when this is going to end, and I have no idea what the world is going to look like when this is going to end. So keep that in mind when you're taking funds. You don't want to hurry up and take funds and then not be able to use them for a payroll cost, and then not have it be forgiven. However, even if it's not forgiven, it's not a bad deal, right? I mean, the pretty decent terms of the loan. So if you have another loan, which maybe you're paying a much higher interest rate at 8%, 10%, whatever have you, this may be a good way to leverage, pay that off, and keep this loan, which has better terms. The other big loan, the economic injury disaster loan, is the other SBA lending. A really good feature about this, I want to point this out first, is the $10,000 advance. So first of all, I must say, if you've not done so already, I have been harping on this for the past 2 weeks now, like drilling it to everybody, emailing everybody, clients, family, friends. It's like, apply for this. If you have a business, apply for this. Because the first component of this EIDL is a $10,000 grant. Well, the regs say $10,000 grant. So what it means is when you go to the SBA website and you fill out the 2-page application, it'll ask you if you want to apply for the grant, and you want to click yes. This grant, they said it was a $10,000 grant, but $1,000 grant. But what it's turning out to be, the way it's being implemented is they are giving $1,000 per employee on the application. So on the application, it asks how many employees, and if you checked out 5, I have clients who got $5,000 because they have 5 employees. One client is a sole prop to go $1,000. The good part about this is if later you are denied for this loan, or you're accepted and you deny to accept the loan, and you don't want to take the loan, you feel like you're okay, you don't want to incur this loan, you don't have to pay this back. So why not avail of the free money, right? Because we need cash right now to sustain our businesses. So like I said, this was supposed to be out in 3 days, and it took longer than 3 days, but it's on track. However, I must say that I myself applied over 10 days ago, and I have several other clients who applied 10 days ago. And I was talking to an SBA contact, and they mentioned that it's possible that if you have not heard back from them, the data is lost, because SBA website crashed like 3 times during the last few days. So if that's the case, what they're suggesting is go ahead and apply again. It doesn't hurt to apply again. It's a 2-page application, takes like 5 minutes. And, they're going to match the social security number or the EIN anyways, right? So go ahead and apply for that. That's like a given for the EIDL. Now, EIDL in itself is not a bad terms. I'm sorry, that's a typo over there. It's 3.75% rate on up to $2 million of loan and over 30 years. Again, like I said with the PPP, same thing goes for EIDL. Great terms. So if you have another loan that you are paying a much higher interest rate on, take this loan, pay that off, lower your interest, your payments. Excuse me. So again, over here, you have the option to postpone the repayments to 1 year after you take out the loan. So the first year is pretty much, no payments due, and they have a streamlined application process. The application is that 2-page application that you fill out where you check off the box for the advance, the grant, and then you should hear back from the SBA regarding further documentation, what they will need. There is a link over here. That's all the SBA loans and all of that other stuff. Now I want to talk about some general suggestions for you. Like I said, the loans are one part of the whole stimulus package. There are so many, there's a potpourri of incentives in the CARES Act that I want you to be aware of, so that depending on your particular situation, you can take advantage of it, right? We talked about the payroll tax credits. We talked about the employee retention credits. There is, and we'll talk about some more of this, but some really basic general ones. Look at cash flow management, right? See where you can cut down your expenses. Perhaps reach out to your lenders. The governor has approved hold off on mortgage payments. I know Bank of America is Chase, Wells Fargo. They're all offering deferral of payments. Now, the big thing to remember over here is the terms. What is it? You want to make sure that what you're agreeing to is, what you think it is. It's, first of all, it's not forgiveness, it's forbearance. That means that they're going to defer these payments. Some banks are actually tacking these payments at the end of the loan. You want to make sure that depending on your case, whichever it is, whether you want tacking at the back end or you want it deferral and then in the 4th month, everything comes due. Make sure that you understand what you are agreeing to. The other thing I would say, perhaps securing a line of credit is something that you want to look at, right? The terms are really good out there. Perhaps that would be a better fit, or maybe I shouldn't say better fit. Maybe that would be something else to consider in the whole package. If you're a tenant, contact your landlord for a reduction of rent. If you're a landlord and you feel your tenant is not able to pay, offer forbearance, offer a reduction. I know, with the temporary moratorium on evictions, it's not only you have no recourse, but for now, but we don't know when the courts are going to be functional and what's going to happen. Think of alternative modes of payment. Maybe you want to, depending on what your situation, you know, perhaps I was talking to one attorney and she suggested, well, perhaps you want to do reduced rent. Maybe you want to do like $500 and not just no rent, because then they have some skin in the game as well, right? Instead of saying, oh no, you don't need to pay any rent now and it's all deferred. Perhaps you want something, some skin in the game, or perhaps you want to do a combination. Perhaps there's some work that needs to be done at home and they're handy, so they can do that. Think of different options. Again, contact your vendors. They're showing, stop that showing, but they're showing compassion. Whoever can, right? So look into those options. Big one, contact your insurance company. I was talking to an insurance broker and they're like, lot of insurances, a lot of your policies not probably, I know nobody has a COVID-19 clause in it, right? But some policies do have a pandemic clause to it. Again, what I'm suggesting is, even if your policy does not have a clause that specifically is insurance under pandemic, go ahead and apply. Go ahead and file a claim. With all the changes going around, I'm sure there's going to be, well, I shouldn't say I'm sure, but it's pretty likely that there will be some requirement for insurance companies to foot some of the bill as well. So regardless, go ahead and file the claim. Another big thing that I want to point out over there is the law was that if you're under 59 and a half, if you take distributions from your retirement plan, you have to pay penalties. The penalty of 10% for federal, and California has a 4% penalty. Excuse me. The CARES Act has temporarily eliminated the penalty. So you can withdraw up to $100,000 from your retirement plan without any penalty. Remember, it is still subject to income tax, but there is no penalty. But the income tax can be paid over a 3-year period. And it doesn't even have to be paid third every year. It can be paid ratably over 3 years, meaning at the end of 3 years, if you want to pay back the distribution to your retirement plan, it's really an interest-free, penalty-free loan to you. But if you want to keep those funds and pay taxes, then at the end of 3 years, you pay the taxes on it. Now, I'm always really careful when I say, well, take money out of your retirement plan, because really that's your your savings for your retirement. But in some cases, it may make sense to do it. So consider that in your unique situation. Again, talk to your advisor. That's what we're helping our clients with. And if any of you want to talk to us about that, I'd be happy to, how to kind of package the whole thing. The other thing is you can take loans from your 401k. You could always take loans from your 401k up to $50,000. But now that amount has been increased to $100,000. You have to keep in mind that if you leave your employer, that has to be paid back. So again, the point being over here, there's a lot of things I just helped a client who is actually helping her daughter, who started a business last year, to kind of maneuver this process right. And the business was doing great, and now it's kind of stalled, and she needs a fund. And in her situation, this worked out great because she knows when things get back to normal, there's, things will ramp up because, it's a great business. So she's thinking of it as being taking the distribution out of her retirement plan as being a loan, because she's gonna pay back in 3 years, and really give this loan to her daughter, to sustain through this, right? So again, I'm very careful about taking money out of retirement plans, but this may be a good solution in some cases. And this may also be an opportunity for some folks who do have the cash flow, but your income is lower in 2020, right? This would be a great year to possibly roll over some of your traditional into a Roth, meaning um, the traditional IRAs, when you have funded it, you got a tax deduction for it. But when you take the money out, you pay taxes on it, right? Or whatever your tax rate is when you take the money out. If this is a low income tax year for you, consider um, taking the money out and rolling that and putting that into a Roth IRA. So meaning you're going to pay taxes on it this year when you're in a lower tax bracket. And then when you take money out at retirement later on, it's tax free. So lots of things to think about. The idea over here is to make you aware, and really for you to look at it holistically. Another great one, I want to say, I've been just so, I mean, we all know how restaurants are coping, right? They're doing takeout. I was in a webinar and he was talking about how this one restaurant is doing takeout dinners. This is like 2 weeks ago, 3 weeks ago, when everybody was hoarding toilet paper, right? Uh, so what the big ad was, he was doing steak takeout dinners with a roll of toilet paper. How smart. I have a client who has a yoga studio, and folks started calling in wanting to cancel membership and what have you. And, he panicked, but then he was like, let's do online yoga classes. I mean, what a great way to increase a source of revenue, right? Even when things go back to normal. Well, I say normal, who knows what that normal is going to be, and when we're going to see any sort of normal, right? He has an additional source of revenue now. He can continue with online classes as well as his in-person classes. So think outside the box. Maybe this is a great time for you to maybe work on the internal controls and procedures in your business. Maybe this is a good time to ramp up your marketing, or maybe just take a class or two or something, do something that you've always wanted to do to enhance your business. There's just so much, right? I mean, I have found a venue. My goal, just sharing a little bit of myself, my goal for 2020 was to reach 20,000 taxpayers and business owners and educate them on taxes, on the importance of tax planning, on the importance of how or why the Warren Buffetts are paying 15% tax and small business owners are paying so much more in taxes. Why that doesn't make sense is because the services of proactive tax planning is not available, or I should say easily available and easily accessible to small businesses. It's accessible to the large corps. It's accessible to the billionaires, but not easily accessible to the small business owners. So I have really my passion and my goal to educate on this as many business owners as I can, right? So that starting, I know it was a lofty goal, 2020. I said I'm going to reach 20,000 people, but hey, we're all doing online stuff now, so perhaps I'll get to my goal sooner. Just what I want to say is we have what we have, right? This is the situation we have. Let's make the best out of it and find ways how we can not only survive, but thrive through this and support each other, right? Oops. Oh, this is my slide. What's next? I did say that I think I'm doing good on time. Jody, correct me if I'm wrong. But I'm done with the presentation so we can take questions. But if you'd like my Facebook page, FinTax CPAs, we're posting there every single day. And if you like it, I believe you get notifications. I'm learning Facebook, so bear with me. I think that's how it works. We have really valuable content on my website, FinTax CPAs. You'll get a whole bunch of good information there. My phone number is up on the screen. Email me. I'd love to help you out. That's my passion. And if you'd like to schedule an appointment for a consultation, that's my online calendar. I'd love to help as many business owners. If I can just help one person, I think I'm good. My mission is solved. That's about what I have for my presentation. And then Jody, maybe we can.
Yep.
Great.
So we got lots of questions that came in on the Q&A, and then there's some on the web chat. So if you want, I can just kind of start going through and reading them off to you to get answered for people, if that works. We got about a half an hour.
Sure.
Okay.
Or I did pull up my chat, so if you want, I can go through them as well, but whatever works.
Sure, I've got the chat, and then did you open the Q&A as well?
Oh, I did not.
Yeah, there's 20 posts in Q&A, so if you maybe only I see those. So I can go through and read in the Q&A. Sure. So Dawn Jensen asked 2 questions here. How does unemployment work if you close an escrow? And can you apply for both PPP and unemployment with PUA?
So great question. If you are going to apply for unemployment as an employee, right? You cannot apply for PPP as your own employer, right? I think it's and having said that, I do want to make sure you go to the EDD website for the pandemic unemployment assistance. They're still working on guidance on that, but they're going to ask you for documentation, right? So if you close an escrow, that means you have income. Now, if it's for EDD purposes, California benefits, I don't think that's going to be allowed. But for the PUA, what the instructions say is if you have lost income or if you have reduced income, you may be eligible. So I know they're still working on the guidance on it. I know as much as you do at this point because that's just about what we know. And believe me, I have, HR was not my focus, but I sure have learned a whole lot about unemployment in the last couple of weeks.
Yep. Bernice asked, kind of on the same type of a topic, do you think it's better for a real estate agent to apply for the EIDL loan rather than the PPP loan? And do you have to show profit and loss statements?
Great question. Yeah, I think you can apply for both. It doesn't have to be one or the other. Now, how you use the funds, you have to be careful about, but there's no harm in applying for both. And yes, you are going to have to, for the EIDL, they are going to ask you for documentation, a lot of documentation. And for the PPP, because they are just kind of rolling with it, SBA has kind of stepped out of it. But they are guaranteeing the loans, but they have really given authority to the banks to do whatever limited underwriting that they're doing. And the banks, every bank is doing it differently. Every bank is requiring different documentation. So, best place would be to talk to your bank and find out what they want. But they're going to want to see your P&L.
There's been a couple questions on here about business bank accounts. So one person said, do you need to have a business account for PPP? One person said that they're asking for them. They said they've always had one account for commission checks to go in and business checks to go out, but it's not named under a business account. So how does that work for some of these things?
So really, I mean, if that's like, if you are conducting business, if you are a business owner, that's even outside of these loans, you always want to make sure that you have a separate bank account. And that's for liability protection purposes. When you are running a business, you have to make sure that you're running a business. What that means is you have a separate bank account. You're not commingling funds. You're not, what do you want to say? Separate bank account, commingling funds, and you're not, you're treating it as a business, right? God forbid something happens and you're sued. That's the first thing attorneys are going to look at. Are you really conducting a business? So that's number one. So you should have a business bank account. And I would say talk to your bank, maybe, because I know banks are, that's what they're looking at to make, for your business bank account information. So perhaps you want to open one. I don't know, talk to your banker and see what you can do about that.
Let's see. Are wages for irregular hourly employees or temporary help eligible?
For what? Eligible for what?
Are eligible for, I guess, probably for the payroll protection.
Okay. Yeah, so those are, you have to be, you have to kind of convert it into FTEs, full-time equivalent, but they are. What is not included is contract workers. Because the thought process is, when the regs first came out, they didn't specifically say it does not include contractors, but they came out with guidance after that and clarification that contractors are specifically not included in the payroll cost because they can apply on their own behalf for the PPP.
Okay. This question came from Ron, so we may need clarification possibly. Is there a dollar amount limit or maximum to attain California paid unemployment benefits?
Dollar amount limit of wages or
maximum? So I'm wondering, maybe the question means, can you make too much, or do you have to make a certain amount to qualify for unemployment?
Yeah, great place would be EDD website has a calculator actually. Put your information in and they can actually tell you what your benefits would be.
There's a question on federal payroll taxes are due today. Is there an extension on that?
Payroll tax, you still have to file the payroll tax return. You don't have to make the payments. Now that's for payroll taxes, not the not the trust amount, right? So not what you're withholding, but your part of employer taxes.
Okay. Ryan Mole had a couple things here. Looks like there was an application for EILD directly using the streamline process on March 30th through the federal SBA website. Received an application number, but have not received any communication back. Just making sure I haven't missed anything. I have not been prompted to send anything additional since completing the streamline portion.
Yeah.
And I guess the website guaranteed a 72-hour turnaround, and
yeah, and that's, you're saying that, and that's really generally that's what's happening all across the board. Some folks have received the checks, and some folks have not received anything, no notification, except that loan number, and I'm one of them. So that's why I'm suggesting to go ahead and apply again, because from my source, I was informed that perhaps the data has been lost.
There's a question, will a realtor qualify for pandemic unemployment assistance if he receives the CARES fund in their account?
When you say CARES funds, are we talking about PPP funds, EIDL funds?
I'm not sure. So if Regina submitted that question, so if you want to put a little more information in there, or put your hand up and we can ask. I'll go into some of the other questions while we wait for clarification on that. Let's see. As an independent contractor, I mainly work out of my home. Can I use the PPP loan to pay my mortgage, interest, or home utilities?
Interesting question. And I work with a lot of other accountants, and we're all pondering about the same thing. I want to say I don't have a definitive answer on that. Maybe we'll get more guidance. But as I see in the code, there is nothing specifically that says you cannot, but I don't know. Perhaps we'll get some more clarification.
So I think it sounds like you may have answered that. The question is regarding the federal payroll tax payments, Social Security tax, Medicare. Can you defer those? But it sounds like you answered that one.
Yeah, so you defer the employer portion of Social Security.
Okay. If you're a landlord and the tenant is moving out in a month, but you can't show the property to a new tenant because it has to be vacant, and there's new laws around, guidances around that, and your property is going to be vacant, is there a way to cover the lost rent because you couldn't show it?
So you are eligible to apply for the loans, because EIDL, you can show loss of revenue, and those funds that you get. So like, for example, the first part that you get, the advance on the EIDL may offset a little bit of it, and then you are eligible to get the EIDL loan if you have loss of rental income.
This question is, I own an S Corp myself, so I will not qualify for the $10,000 for wages and related. I paid my wage through my S Corp W-2 EIDL. So will they not be eligible for the wages?
So if you are an employee, I think what you're saying is you're an employee of your S Corp. So your S Corp paid you wages. So you would take that amount, that's your payroll cost, the one part, the compensation for your payroll cost, and you would be eligible for your PPP. I think you said you won't be eligible.
They're saying they won't qualify, even though it says they paid their own wages as a W-2.
I think you will qualify. I wonder what makes you think, did a banker tell you you're not qualified? Because that's payroll, that's payroll costs, and that should make you eligible for the PPP.
Okay. Let's see. Are you able, so this is recorded. And I believe I'm gonna be able to send it out afterwards. Somebody's asking if they can get a copy of the slides as well.
Um,
And if not, that's okay.
yeah, I think I'm okay with, I'd be happy to that you're providing the recording. Um, Not happy with providing the slide deck.
No problem.
But feel free to call and I can walk you through anything.
Any update on the PUD from state unemployment?
Not as of yet. I was on the EDD's website this morning and still basically what they're saying, showing right now is who's eligible and what you can get, but nothing more on that yet.
I know personally, my sister-in-law, I was trying to help her apply for unemployment. I don't even know what time it was, but on the website to do it online, and I couldn't even get through. Yeah. And then I heard today that the governor has increased the hours for the unemployment telephone line. For now, it's 8 to 8. I don't know what it was before, but he did increase those hours for 8 to 8.
That's good to know.
Let's see, a presenter, somebody's just typed in, a presenter from SBA on NPR said corporation owners who are self-employed are eligible.
Corporation owners, kind of like what the other participant said, if you are a employee of your S corporation, you are basically eligible.
If we are a self-employed realtor, how do we provide the documents to apply for the loan?
So you need to apply. You need to present your P&L. I mean, if you filed your 2019 tax return, that would be. I'm thinking that you're talking self-employed in the sense of you're a sole proprietor, Schedule C. So you would provide your 1040, which includes your Schedule C, which shows what your net income is. If you have not filed your 2019 tax returns, the banks are taking your P&L for 2019, which shows what your net income is, and that's what you show. Now, if you meant that you are you have an S corporation and you are a sole S corp owner employee, then you are going to show do the calculation what we talked about based on your payroll from the S corporation.
This is one of the emailed questions, so I don't know if you answered this. How do you fill out the EDD for unemployment?
To that, yes, thank you.
Is our broker our employer? I couldn't figure out how to submit my 1099 in 2019. Have you heard of any realtor actually receiving unemployment benefits? I fall into the high risk category for COVID, and there's no way to go into somebody's home. I won't even walk into my parents' house.
Yeah. Couple of questions over there. So if you receive a 1099, you are self-employed. Whether you call yourself an independent contractor, self-employed, sole proprietor, whatever that is, you are you're filing a Schedule C if you receive a 1099 at the least, unless you're incorporated. So when it asks you the question, who's your employer, that's you. So you put yourself as the employer. So that's the first part of the question. And secondly, for the unemployment, EDD, I don't believe for EDD you qualify for unemployment if you are self-employed. It's the pandemic unemployment assistance is what you would qualify for. And nothing over there yet. Should be coming soon.
Somebody asked if they understand the formula for the PPP loan? If they made $85,000 in 2019, would the loan max amount be around 17?
So remember, it's not just your gross wages. So if you made $85,000 in the 12-month period prior to when you're applying for the loan, you have to add in your health insurance, any retirement benefits, and you have to, subtract employer costs. So assuming that there is nothing of those, and $85,000 is what you are dealing with, then you're right. You would be eligible for 17,708.
Let's see. If I issue a 1099 to my assistant, are they eligible for PPT or unemployment benefits?
They're eligible for both. No, I should say both. They're eligible for either.
One, or so they need to pick one. It sounds like, okay.
Because if you think about it, I mean, and this is my thought on this. There's not much guidance, but if you're applying for the PPP loan, what you're saying is, I want to stay in business and I need these funds to sustain my business. So I don't think, unless we have more guidance on it and how we know how they're implementing it, I don't see this happening, that they're going to give you a loan to sustain your business and then go around and give you unemployment. But again, we'll see. Lots of things are happening.
Yep. Somebody mentioned that they may have heard it from SCORE. You may have, that they're going to roll out PUA in 2 weeks. Unfortunately, I know I can't speak to that. I know our government affairs director, Tim, is, I'm not sure if he sleeps anymore with all of these changes that are, coming out. It was hourly for a long time, then it's daily. I know when the whole thing about forgiving rent for tenants came out, he was in a city council meeting, I think till 1 o'clock in the morning, trying to get a handle on that so we could try to bring everybody the most current information that we can. I will say that on SCORE's website, I'll copy and paste this into the chat box. Score.com/transaction has, we try to put as much information as we can as it pertains to the real estate business and what you can do. I know yesterday photography was deemed an essential business. I know they've been fighting for that. So, Angie's got so much information. I know Tuesdays you do your town hall. You guys should all tune into that. And then also, we try to get information up, again, as it pertains to Santa Clara County, onto the website.
Right, and good point. As it stands right now, things are changing rapidly, and this information could be modified tomorrow. So
yeah. We got through all the questions. Anybody else? Let's see. Carr released a letter yesterday from California Labor Secretary, who said they need 2 weeks to get their website up and running to accept the PUA application. So that sounds about right. Hopefully in 2 weeks. I'm really hoping that there's no delays on that. So
yeah, because it's tough times right now. We need all we can to get through this.
Yep. Well, we got through everything. And if you have any last minute, before we go,
I just saw something pop up here.
Yep. Clarify income to report is gross or adjusted gross.
I assume you're talking about the PPP.
I think it was because he submitted the questions about the 1099 and which you could apply for. If you could apply for the Let's see, let me get to the question. Unemployment or the PPP loan? And you said one or the other.
So, I wonder which one they're asking about. If you're asking about PPP, it's the gross wages on your, that will be on your W-3, box 5. If you're talking about, if you're asking about EDD, I think they have the formula up there on the website. I don't have firsthand knowledge of, but they have a pretty good website instructions on that.
Okay. And then somebody submitted a question about health insurance. Their husband helps to pay it through his work. How can we save money on my portion? I guess my first question would be, are you double covered then through your husband's health insurance? And then if you have your own health insurance, I guess there's a question on if you can do that. I don't have my own.
So you're covered under your husband's then?
Yeah, I would think that if you're covered under your husband's, then any of those premiums would come out of his paycheck. Maybe it's a question of helping to pay for medical expenses that the insurance doesn't pick up. So any deductibles or things like that.
Yeah, great question.
I'm trying to. I think that's what the question would be.
There's ways to do that, and that's more of a I guess what I'd say is contact me and then we can talk about it. But there's definitely ways when you're a business owner that you can take advantage of the code and be able to provide for not only health insurance, be a deductible health insurance, but also pay out of pocket costs. And take a deduction for it. Yeah.
Okay.
That would be a 2-hour tax to talk about.
Okay, I think those are all of our questions. Great information. Thank you. When I send out the link for this, I'll remind everybody about your Tuesday town hall that you do, so that as we talked about, this stuff changes all the time. So tune in to Angie's Tuesday town halls, and she can give you more of the latest information. Email with questions. Check out her Facebook page that she's going to be a pro at by the end of this.
Let me share my Zoom ID for town hall. And if you go on my Facebook page, it'll be over there as well. But Jody will share with me the contact list, and then I'll put that on my mailing list. And so you get, I send out tax alerts and newsletters and all good stuff, and the reminders for the town hall as well. So then you'll be on the mailing list.
Okay, well, thank you so much, everybody, for joining. Have a great rest of your beautiful afternoon, and we'll see you guys later. Thanks, Angie.
Thank you. Thank you for joining, everybody, and good luck. We'll get through this.
Yep, we will.
Yeah.
Bye.
Bye.